Meanwhile, back on the ranch, waiting for my YouTube to load up on Windows. Hey guys, if you can hear me on Zoom, just let me know you can hear me on Zoom. Just testing the world of Can you guys hear me? Hello to all. Eric and RF, thank you for joining. Can you guys hear me okay? Test, 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 test. Very good. I appreciate the feedback. And I am going to load up our stream and we'll get started. Okay. Boy, sorry about that. No, I'm not sitting on my luxurious bathroom here, even though I'd like to have it gold plated one day. Have you guys heard about the US a guy who does preaching? He wanted a fourth jet. It's crazy there. Just crazy. Anyways, I'm ready to get started. I hope you guys are too. Let me pull up my PDF document here. All right, so a lot of you tonight most likely are not in Toronto. This is a repeat performance from last Tuesday for when I did the presentation to FXCM in Toronto. I think it was 13 days ago. So I'm going to share my screen. Just give me confirmation you can see it. Actually, I don't even need that. I can see it on YouTube. All right, so you guys should be able to see my screen. Hooray, hooray, hooray. All right, so oh, there we go, I can see it. Okay, welcome, 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 welcome. Boy, got lots of stuff to share tonight. Thank you. I appreciate you guys being part of this. Okay, thank you. Okay, so let's get started. And all right, so really this talk is geared towards that are new to the world of programming, algo trading. So I wanted to talk about algo trading with not only Forex, but I'd also talk about cryptocurrencies. Need a request to expand the screen. Okay, but I'll lose the important part. Oh, no, I'm okay. Okay, I got the chat mode open for both YouTube and Zoom. Okay, so let's proceed. All right, first question. Okay, so like I said, this talk is really was geared towards Forex. Now it is crypto. The reason I'm jumping all over crypto is because we have 5% moves. Was it last night or night before on crypto with Ethereum? If you've been watching my videos, you'll know that I'm making amazing progress with the Binance market data, and as well as some of the indicators I'm using. I'm just in the last stages of being able to bring them all together. I put up a video on it earlier today, so you can just go check that out about the different parameters that will make the trading decision of what is hot and what is not when it comes to trading opportunities for cryptocurrency. So what are we talking here? Usually over the last number of years, I've had 3 different audiences when it comes to automated trading in general and people wanting to learn about it. First, we get the usual retail trader. Then we get another group for students who want to make career moves into the financial industry. And actually, a lot of the younger people are getting out of the financial industry and moving into startups and want to work at Google for better money. So there is that happening, but there's still a gob amount of people wanting to work in the financial industry. I'm talking about investment banks, hedge funds, those sort of boutique-y kind of places. Algo traders of any experience is the other group. So the first one I think we got to talk about is retail traders. Some stats. Pretty well, I'd estimate that 90% will lose money just because they're unsophisticated. They are not able to really comprehend the amount of work you need to get into this, be able to cross what I call the finish line to be able to really successful at this. It's just, well, I'll talk about it in a minute under the characteristics that you need, but we'll get into that in a little bit. Okay, the other thing is most people in retail tend to be lazier because they're using trading platforms. There's nothing wrong with that. It's just that their approach is just always trying to pick the easy route, which kind of gets them into trouble in the long run. The other one, a group is students, specifically Python for students. So as an example, we have schools teaching younger students starting at age of 9 Python. They do that to stay competitive with what is pretty well coming out of places like China, India, where there's just like literally a lot of their young are learning about coding, and companies see that, and that's who's going to get hired. So a lot of corporations or a lot of countries are trying to keep up with that. UK, they just announced it here in Ontario. It's becoming more critical to stay in the game. Also about Python, generally, there was a survey done last December where Microsoft wanted to know if they should include Python as part of their basic scripting language within the suite of Office, which is quite interesting on the direction that Python is going in. Also, the graduates are basically the graduates out there are learning about learning how to stay in the institutions of Python. So a lot of the universities are teaching Python as well. Obviously, high frequency trading firms are teaching Python and use Python, C++ as well as standard. There's some great resources out there as well to learn about algorithmic trading with Python, like Quantopian and QuantStart. Funny thing is, I just got confirmation. I did see Ernie Chan a while back at in his hometown, and he was telling me how Quantopian are pretty well. There's not a lot of institutional players in excuse me, while my famous Windows system decides to crap out on me. So I won't be able to take questions in the meantime on YouTube. Anyways, continuing along. Wow, Windows sucks these days. That's why I'm sort of distracted. Continuing along. Okay, so the big group is obviously Python for algo traders. So here are some stats for electronic trading. 80% are driven by electronic trading. That's in the US for equities. A lot of people are pretty well interested in all asset classes in trading. That's even in fixed income. Now, from what I've seen and from my experience, most profitable traders use automation to be able to scale their automation, is what I call it, into infinity, literally. There's no joke when I say that. So again, why Python, the pros? I always use this quote from George Washington: "Liberty, when it begins to take root, is a plant of rapid growth," and that's because Python is open source. Yeah. Okay. So also eBay, as an example, Python has seen some of its fastest adoption at PayPal within of all places. I find the application security group. I find that quite fascinating. Also, Python is excellent for doing quant studies and math analysis. We use this manner for HFT. Also, one of the big things when I started working with Python, I've only been using Python for about just over 2 years. It was very difficult to get Python running on Windows, so it's been really built for more math compliant systems like Linux and obviously Mac OS 10 or Mac OS now. So the tools, libraries you need would include pandas, NumPy, Matplotlib, a way to download your data. A good example of that for cryptocurrency. I would use CCXT. If I've been talking about that numerous times on my videos. If you're wanting to do Forex, actually, I would sort of stand behind FXCM if you're starting out. It's pretty well built flawlessly, has very few problems with it. And I learned that it was Eve Yiplish that built that wrapper for FXCM, which is quite good. Also, to succeed, these are the characteristics that you pretty well need to be successful. The first one is obviously be comfortable with the mentioned packages and tools that I mentioned earlier for Python. Obviously, you have to have access and be confident with computer systems. So it's not like I'm here to teach you how to open up a window or some dumb thing like that. And that's not my job. Probably the most important characteristics for all of this is you have to have inner drive and motivation. Without it, you will not get across the finish line. Very few people get across that finish line, but I think more and more people are starting to understand how important it is. This is not a quick, rich scheme. This is not an easy place to just one day say, turn on a computer, type up in your Python interpreter, and voila, you're making money. It's not like that. You do have to put the time and work into it. Also, you have to have the focus and time to learn and implement. And the other big one is to have a background in basic elements of trading. But you can't really ask that question as a whole, because that's a very hard thing to answer, in my opinion. Anyways, I'm just trying to load up my YouTube here. Okay, so there's always questions and whatnot for the newbies. Like I said, if you're watching on YouTube, my YouTube stream's down because of the world famous Windows is messing up. So I'm just rebooting it now. So a couple of resources we really need new at this. The first one is to, even though I can sit here and start trashing Microsoft, they do put out some interesting resources like Channel 9 for Python learning. It's free. It's interesting. You might want to watch that. There's a standard website and book called learnpythonthehardway.org. If you want to learn more algorithmic-based type of trading, a great resource and free is on YouTube, a YouTube channel called SENT, S-E-N-T Dex, okay? So that's a really good one. Just so everybody knows, this is being recorded and will end up on my YouTube channel. Okay, so anybody got any questions so far? I'm only gonna take questions on my Zoom right now. I'm just still trying to set up the tortoise that I call Windows to try to get everything back up the YouTube stream. So just bear with me there. But anybody on YouTube, on my Zoom stream have any questions? No, yes, no? Okay, so I'm going to show you the strategies as the basic mechanics of basically how to build an arbitrage strategy. It's a pairs strategy that I did a few years ago. I did it both in MATLAB, which I still absolutely love, but it's just why bother? It's pretty expensive to maintain the license and support. And I also did the same thing in Python. So these are the mechanics that I've used, and it worked out pretty nice. Okay, first thing is, when you start out in this world in quant, this is kind of like what you see. I mean, this is from a paper from SSRN, 100 formulas paper, 101 formulas. It's crazy. I mean, that's kind of how you look at the markets, and that will stop you dead in your tracks before you even get started. So don't let that discourage you. I don't think it's wise, but I've learned the hard way to keep everything simple. Like, I mean, dead simple, brain dead simple, that you can understand it, because it's really critical to understand that. The next thing is, before we start, I just want everyone to know, yeah, I've been picked on or whatever. I've been doing this for 10 years, but I've been more of a developer much longer than that. So I've gone in and out, what languages work and whatnot. I've played around with a lot of different models and math and whatnot, but I ended up looking at Python, and Python seemed to fit the bill. The financial world in industry is using Python. I can see why, because it's easy. It's easy. I mean, I've already talked about the benefits of it, let alone, it takes like 5 lines of code to do something that take you 200 lines in C++, an example. So that's where I'm at right now and moving along. So as I said, there's the strategy is the basics or the mechanics of an arbitrage strategy. Now, when I sent this in to FXCM for, I guess, on the approval, I really dumbed it down and made it less funny. So, and less corporate stuff here. I had the Toy Story robot say trading is everywhere. And it's true. When I look at cryptocurrency, and now I have the ability to play with over 315 cryptocurrency pairs. I mean, you cannot say that there's not an opportunity at any point out of 315 symbols and currency pairs that there is never going to be an opportunity there. There is, and they're pretty good ones too. And I don't want to say it's like taking candy from a baby, but it seems to work real well. All right, so the first thing is, as I said, this has been built for the Forex brokers. So there's this other asset class that nobody really talks about is the CFD, contract for difference, which is really owned by the brokers. For a lot of people, I've done surveys. A lot of people like the options market. They like the futures market, but they don't have the capital to lay out to put on future positions. So CFDs is a really good place to practice in because it's the poor man's futures market, essentially. They trade equity markets, indexes, what do you also call them? Different commodities, popular ones, of course, and some agriculture. I mean, it goes on and on. One of the brokers I like has about 600 different asset classes on Duca's copy, which is pretty impressive. So moving on. So everyone likes to focus on stocks. That's fine. Most professionals I see only use indices. That's why they're popular, or ETFs now. They don't buy a lot of direct stock. They basically give profit, take back profit, and that seems to be the trend. So the best you may break even. There's just better asset classes out there, but this is for people that want to trade stock. So the first thing you got to do is when you're working with any type of data, you need to make sure you're using forward-looking data. I'll talk about stats in a minute, but what I found with Eurostats, which is called Eurostats, or sorry, you go to Eurostats, the website, and you ask for, you download something called the Economic Sentiment Indicator. There you'll find all kinds of neat things where there's a Euro Union and the Euro community. So all the different members report forward-looking data on the general specifics of the economy. May it be building, may it be manufacturing, consumer confidence, and there's a few other ones. But that gives you an idea of how these countries feel about their economy. And the interesting thing I found about it is that it's great to narrow in opportunities, specifically like in Scandinavia, which seems to be affected by what goes on in the world. It's pretty interesting. Anyways, moving along, we then get into the American government sources. St. Louis Fed's got a really good one called FRED for all the data, and you can download it through APIs or spreadsheets and whatnot. That's what we're really working with here. So you just turn them into data, common separated value files. And then what you do with all this data is you scan different hot market sectors, because as I said, you get all the different breakdown on how the market is in terms of opportunity, depending upon the sector you're looking at. So for instance, if you have a high consumer sentiment looking forward, obviously you want to work on consumer related stocks or sectors. That's where you get the best performance, and that's what you're looking for. And you're doing this at a sector level, so you scan it. And what you're doing out of that is you're going to use a variety of different a different level of different factors, forward-looking factors to choose your long and your short. So what we're literally doing is we're trying to find our weak player and our strongest player in the sector. From there, what you do is you use, again, forward-looking data, and earnings price per share is probably the strongest indicator you can use out of this bunch, because it's forward-looking, and you can look out a year, quarterly, a month. That's put out by the company, and that's like their guidance, and that will determine how they feel about the outlook for their company's performance. And they can't lie, because their stock price will get punished otherwise. So what happens is, with EPS, then you can determine who's got the higher EPS and the lower EPS. And you usually want to go with the one with the higher EPS, because that'll give you better performance. Yes, Zeta, this is being recorded for YouTube, on my YouTube channel, so they'll be up pretty fast. It is running live once I can get access to it. Just because as I said, my Windows system's just having a connection right now. Anyways, so the EPS is really good. So you want to make sure the companies you pick off meet your criteria. So you got to make sure that your company that you pick, regardless if it's a weak player, at least gives up some form of guidance. Because if I'm not going to give guidance, it means it's going to be really, really crappy performance. So why bother putting that out there? So you want to always pick the company that has some form of an EPS in their guidance, which is usually delivered every quarter in their annual reports, or quarterly reports that they put out. Okay, so once you get that long and short, then you can put, because you got over a couple of hundred different sectors in the US market alone. And from that, you're able to determine, with a bunch of other factors, including beta, maybe a simple form of Black-Scholes, then you can get better pairs that will give you a wider performance. So you can use this watch list and generate a watch list among the different couple of hundred sectors, and then be able to put the positions on that looks best to you. So that's the whole point of this phase. Okay, the next phase is using technical analysis. Now this is kind of weird for me, because here I am, I've poo-pooed it, technical analysis for many years. And I'm going to be honest with you. I've had instances where I've done quantity stuff, as I like to call it, and the quant never worked out. I don't know why. I think trying to do sophisticated things on a high speed level, 5 minute, 15 minute, 1 minute, even tick. I just found that there's so many factors that worked against you, and that was just always like a high percentage of false positives that screwed up your positions. And basically what I'm saying is you would lose money at a very high probability of it, and that's not a good way to trade in my mind. So that's how where I started looking at technical analysis the right way, thanks to some pro traders that I've been following and been influenced by. And it's removed this spaghetti code, this spaghetti kind of colored concoction, knowing how to do it properly. And I'll be showing you some samples of that works for me in a bit. And it strips out a lot of the basically garbage out there that will screw you up in your trading. You're trading basically your performance on your account. So I moved to technical analysis. So there's the right way and the wrong way. So the other thing I don't find very useful is statistics, but for what do you call cryptocurrency works pretty good. And because cryptocurrencies are so volatile, the calculation of your standard deviation really helps, because obviously you want to go with a pair, cryptocurrency pair with lower volatility, or preferably lowest volatility, to remove the unnecessary risk of something negative that may happen, like a cryptocurrency pair with a crypto that may get hacked or is manipulated, and that can go against you. So if you use some form of statistics in the volatility to help smooth out all those crappy cryptocurrencies that you don't want to trade, yeah, you can do that through generating your standard deviation. And the other thing I like to use is the number of positive and negative moves on a daily return. So obviously I'm looking for momentum there, and that just depends upon how far back you look at your data. So it's determined by that. So I'm having still problems with my Windows system here. Licensing is a problem, apparently. I don't know if it's a virus. I mean, there's just so many negative things on Windows. Anyways, okay, continuing along. So statistics, because it's historical data, it can really throw you off. And I'm going to be honest with you. It's something I definitely put less value on. But when it comes to crypto, I will say it's a lot more useful in cryptocurrency. So so statistics becomes a lot more valuable to me. Okay, next topic here, next step, position management. This is where things get really hairy, and people don't really watch things too good here. You can have 10 positions, 5 positions, no positions. But when you get too many, on top of you're doing other things and you're trading, this can really mess you up, because you put on a position, your exit, if you don't pull out properly at the right time, your exit can cause all kinds of problems, meaning slippage will work against you. So you lose money there, or to not get the optimal profit. This is where automation is so critical, that you really need to be able to use position management to be able to know when to exit. And as I said, if you got 10 positions on, or even 5, 2, it's pretty hard to determine the right exit. So automation is very critical. But one example of an exit strategy you can use is definitely average true range. Yeah, that's definitely something. Okay, it looks like I have my YouTube stream back. So if anybody has any questions on YouTube or not, you just let me know and we will get you covered. All right, so that's position management. Now this one is P-stats, or sorry, measure your risk. So it's another way of saying risk management. As I said, we want to look at beta, implied volatility. A good example of using these sort of indicators is really important, because, as I said in one of my earlier videos today, if you're deploying, let's say, $100 or $1,000 a day in trading, what you'll find is you've got to ensure that whatever position you put on and the amount of the sizing of that position is proper, it's optimal. So you need to ensure, if you're going to get maximum return, that you're using the right way to measure the risk of that position, and also what the market's telling you on where that price will go. And there's different forms. As I said, you can use implied volatility. There's different ways. If you're an options trader, you can use different forms of Black-Scholes to measure risk, to measure premium, what you should pay on the premium on your options trade, so on and so forth. So this stuff is really important, and beta is really good for, to show the assets that will give you better performance when you pick those long and shorts. Okay, so I already talked about risk management somewhat, but an important formula here is something that a lot of people may not talk about, is called Kelly criterion. I learned that through Dr. Ernie Chan's book, and that basically is a way to throttle your available capital that you trade. So if you have, let's say, 5 days or 3 days or just poor performance of not winning in the markets, you want to protect your account. So that means this formula will calculate how much capital it will allocate per, let's say, trading day. So if you have poor trading run, it will throttle down your available amount of capital you want to deploy per day. So it's going to lower your risk until you improve. You get a better track record for the last X amount of days. And that happens, and you can run the criterion to increase your daily allocation of capital that you deploy and put at risk for trading. All right, so that's pretty well everything. That's quite a number of steps there. I believe it's 10 steps. So the next big topic is the infrastructure. And the infrastructure is important because this is what I call the Python experiment. It's been obviously working pretty good because I've been at it for almost 2.5 years with Python. I haven't looked back. And I've just updated everything into Python 3. So woo-woo, I am a genius. Here's some of the tools I use. I use Mac OS. I'm soon to be Linux distribution. I'm probably moving to Manjaro. The editor I like is Sublime. It's simple. My package manager is brew install or brew. I also use a terminal session called iTerms. Those are my tools. I'm going to skip this section, but just so if you wanted to know when you're starting out and you just want to focus one simple language like Python, I would recommend to set up the FXCM Pi because, to be honest, it does run flawlessly. When you try to use the other one, you're out of Toronto. It's now owned by some, I think it's an Asian outfit. They're horrible. Wouldn't recommend that. You run into all kinds of problems. But if you're just starting out, wanting to play with stuff, FXCM is definitely a way to go. Duca's copy setup is pretty sophisticated because you're involving a whole nother world with Java because it's JForex, which is written in Java, and that's the only option you have. So if you want another broker that is friendlier in Python, for now, what I've seen, FXCM is the way to go. People ask me about interactive brokers, still the best broker out there for API. I think about a month ago, I tried working with the Python option. It's still got a long ways to go. There's a lot of problems with it, but they're getting there, and they're going to officially one day support it. And I'll be all over that if that's the case. Anyways, let's talk about some database options, the hubs, the houses where you're going to store all that data. I've looked at a variety of different databases, commercial and NoSQL and free, open source, The one I've gone with is, and I still promote, which is kind of true open source, not a freemium thing like MongoDB. It's in memory, this NoSQL Redis. It's supposedly the fastest database out there. But I like it. It's 100% free. It's got a great community, and there's a lot of really cool innovation going on in there. So again, we're just going to slip into the world of Redis. So if you wanted to experiment with Redis, Redis for NoSQL, all you got to do is download the package. You can get that through, I use pip. And you can get it through that. It's a pretty big and popular package. Redis is in the top 10 databases in DB engines. So it's not like you're using some out of the garage thing. This is pretty good. So also the Python package, I've got some lines here to show you how to work with it. You can build custom code for building a message queue and different, what they call design patterns. So, all right, so again, I've talked about the data sources. One of them is the Fed and Fred from St. Louis Fed. And this is free. There's no limit, but I gotta put a caveat out there. A lot of people will say they don't trust the Fed. And through this exercise that I went through, it was pretty scary to tell me and pretty well the world that the Fed's not really documenting this. is that there's a lot of data sources that you can get, or data sets you can download from the Fed from the 30s, starting from the 20s. And all of a sudden, before the 2008, 2009 financial crisis hit, they retired those data sets. And what they did was they relaunched a new data set starting in 2010. And the reason they do that, I think, and I've kind of confirmed it through other sources, is they're trying to hide the real severity of where the U.S. Debt levels at, deficits and debt level. It's really bad. I think the Fed is somewhat manipulating the data because you can go back all the way back to the 1800s and some of the data sets, and you see cyclically how the economy has done over the last, let's say, 100 years in some old data sets. And once the data, the financial crisis hit, the deficits and the debt spending with the U.S. government has just gone out of control in 2008, and that's what they're trying to hide. I mean, it's just pretty scary when you think about it. Anyways, enough of that. There is a package you can use, a Python package from the for the U.S. Fed. You can get it here at GitHub. I think a lot of I gotta put a caveat on here with GitHub. Microsoft just bought them yesterday. You'll see a lot of these repositories move over to probably something like GitLabs for now. So some of these links may kind of go out of date because of that purchase from yesterday. So I don't know where it'll be, but for now, it's probably here that you can get this package. And you can get all the data sets. Just got to know what data set you want. You usually do that when you visit the site at St. Louis Fed. Go to the section for the Fed. There's hundreds and hundreds of data sets to pick from, but you have access to that through this Python package. Alrighty, moving on. Now here's one that a lot of people like is charting. But when it comes to automation, nobody really cares about the charting. I have just wrote a script last week that was able to generate nearly 4,000 charts among 315 cryptocurrency pairs. What are you gonna do with all those charts? You're gonna look at them all and analyze them as a human? So at the end of the day, the charting and the visuals are important, but it's only important for the ones that you want to pick for trading as an opportunity. So the one I like that I'm working with, I really like, and it's really cheap, 150 bucks, Chart Director. And then there's the open source one with Matplotlib and Seaborn, and there's another. Those ones I find really challenging, trying to manipulate the date on the x-axis. So sometimes when you might see some of my charts where there's no x-axis, there's a reason why. I'm just too lazy to futz with the dating, the date on the chart itself. But a good one is Chart Director, so check them out. Okay, so any questions so far? I don't know how many people we got on the. I got a couple of you all on both the Zoom and the YouTube stream. Just so I'm going to remind you, you can jump in anytime. I'm under no time constraint to get this done. But what I'm about to show you now are some of the charts that have worked for me. This chart I generated 2 weeks ago. I've got a new one. The only changes are here. When you look at the levels, I'm actually putting the Fibonacci levels there, because when people do their technical analysis, they go, oh, I want to look at level 3.862 or 3.861 and not level 2. So as a result, I just changed the names of these levels to the actual levels on the Fibonacci retracement. But this is one of the charts that I use, or indicators, Fibonacci retracement. I find it really good for evaluating the price historically. As you can see here, overpriced in this one. But there's many, many, many uses with Fibonacci. You can set price levels with it. You can set exit levels with it. Sorry, entry and exit levels with it. It's very powerful what you can do with Fibonacci. And again, it's one of those things I used to poo-poo, but I just didn't realize how important Fibonacci can be for evaluating trading opportunity. There's different ways to look at the markets. I always try to say mathematically, computer science, or trading. When it comes to trading, this is not about science. This is just about, we have a price, it hits, a certain, let's say a certain Fibonacci level, do something. Usually it's going to be an entry, depending if you're long and shorting, and that's where it's at. They don't care about the science behind it, because they just use a simple indicator. And if it hits a certain level, do something, and it's event driven, so it'll be an entry or whatever it is. But that's the nice thing about Fibonacci. The next one is moving average. Now this chart is from Chart Director. Now it's a nice looking chart, and I can do this chart in Python in not very many lines. It's kind of cool, but I want you to understand these levels here of the RSI and the momentum. Those are secondary to me at this point. Same with the Bollinger. What I do care about are the moving averages. The moving averages tell a story, and I've already kind of detailed the different ones, the difference between simple and exponential, why I use these parameters of the SMA 20, the SMA 50, simple moving average, as well as the exponential moving average to 200. There's a reason why I do that. So the crosses are important, and you'll see why in the next video. So obviously we have a Bollinger happening. We've got volume. Now, if you're like me trading crypto, I do see the problem with things like with Bollinger is lagging, whereas the crosses in the moving averages are pretty good if you're using the right time frame for that simple moving average, and if you're using a simple versus an exponential or weighted or whatever else forms of different moving averages. So those are important. You'll see why in the next chart. Volume is very important when it comes to crypto, because I'm working with 315 pairs, and I need to know which ones are going to be liquid. Where what I'm basically saying is, if you put on an order or an entry into, in my case, Binance, the exchange Binance, and I choose a pair that has no liquidity, has no volume, I put an entry on, I may be stuck with that trade for a while because I'm not able to fill it. I may not be able to dump it when I want to exit. So the slippage becomes very, very high and very high risk. So I'm yet still trying to determine what is the great volume threshold that I need to make sure that I am able to get the proper fills, the proper execution I have for my orders when I put them out through Binance. And this is what I got to experiment with. I do think, and again with CCXT, I do get access to the CCXT gives me the access to other exchanges, which also includes CoinMarketCap. And using CoinMarketCap, I'm able to determine if I want a 20 the top 20 most popular cryptos, because those will hopefully be the most liquid. That's my theory right now. Again, it's a theory. So again, we come back to the RSI. Yeah, that's nice. These oversold levels do mean a lot. And momentum, I can also get the same kind of info from my stats as well. Okay, so the next chart is an important one using moving average cross signals. So you see here, we have our upper and down arrow, the buy and sell the signal. This is really important because what drives that is usually these crosses between the SMA periods that I'm watching on. So it could be 5 and 20, it could be 20 and 50, who knows? But depending upon the parameters I use, I'll give you a tip. Last week when I ran my analysis on all 315 pairs, I have access to monthly, daily, and hourly data on cryptocurrencies on Binance. It's all they give me access to. What I found was with the hourly data, to trade like this and to watch these so-called buy and sell signals using the moving average cross, if you are doing it on an hourly or faster, you're going to get a lot of false pauses, because if a certain pair is so volatile, what will happen is you get a buy signal, and then a few hours later you get a sell signal, and a buy, sell, and it oscillates. so frequently, and I've been through this with the Forex data on Duca's copy, trying to trade it under even 15 minutes. There's so many false positives that will throw off your trading and your trading performance. So that's why I'm going to be watching the daily charts, because it gives me the ability to smooth out that data and then to eliminate a lot of that intraday volatility. Now, of course, it's different when you get a fast moving up, very steep profit level or whatever, moving in your direction. Yeah, you want to maybe trade on an intraday hourly basis in those sort of scenarios, but they're not very often. But they do, it does happen. So I just want to mention that, and that's specific for cryptocurrency. Now, this is another important one, is a trend line. What I've noticed, obviously, depending upon how far back I set the trend that I'm watching, usually if it's over trend, obviously it's going to be profit, and it usually is. So if I'm going to try to trade here, is it worth for me to tie up that capital for that little opportunity and put it into something that will give me a better trading opportunity, like in this big profitable, longer running time frame, and here as well. And if I was to short and it's below trend, then yeah, I can make money here if I'm shorting. But again, when I'm starting out, is going to be long only. Okay, that's all I'm doing. I don't care about shorting for now. Now, this blew my mind. I couldn't believe the accuracy that this gave me. If you watch an hour-long video when I did the analysis, over 300 pairs, I would say maybe 10%, 5% had some form of a harmonic pattern. And in here, you'll notice it's bearish or bullish. Doesn't matter if it's Gartley, ABC, bat, butterfly. It don't matter. It's a pattern. That's all I care about. But these are historical patterns that are recognized by the creators of these patterns to say there is somewhat a likelihood that if we get this pricing formation of this pattern, we can expect something to happen to the price. And usually when you run it through a way, the probability of it being accurate on average is 40 to 60%. And that's why you gotta combine it with other indicators to get proper analysis. Okay, and I just put up a video on that showing you how I do that using all the different parameters. I just posted it today on my YouTube channel. There's about, I think, 7 of them. And once they all line up, then you get in. But I'm going to show you ones that really worked out well. So we have our pattern formation, and then we have here our buy signal. What I'm able to do, and it was quite interesting on my analysis, if you get a buy signal, in my case, in the last day or last few hours, where you get that buy signal, and you also have now a completed harmonic pattern, in my case, a bullish pattern combined with that buy signal, it's like, oh my God, this is a really high probable way to confirm the entry that it will profit. We don't know how much. It's hard to know, but it will be profitable. And that's why you want to use these other indicators to measure that momentum, to measure how far it is off of the trend, and other ways to measure the probability of that move. And there's a way you can do that, sort of. But you see here is an example of a trend. We can see here the price has dropped below trend, coming back. So that might mean, is that a form of a market entry opportunity? We don't know, but guess what? If we know it's also completed some form of a harmonic pattern blended with another classic buy signal, chances are it will go profitable. And I'm going to stop here because I've also got 2 other indicators I just finished. One, the automated head and shoulders, as well as the inverted automated head and shoulders. The automated, if you can get that in my YouTube channel, is it will generate little green dots or a blue dot, depending on you long and short. And usually what you're looking for is when you get a formation of a head and shoulder, or I'll call it a hybrid of it. And you're looking for that breakout, and you're using the neckline from that automated head and shoulder. And if it breaks that, and then you have your blue or green dot, you can use that and say, oh, that's my expected move. But some of the stuff that I've seen is quite interesting. So it's another way to filter out the trading opportunity. And I figure, and I've seen some of the using this automated head and shoulders, which is very powerful. Some of them broke the neckline, smashed through the little upward. This is our expected move that we expect, and blew through that. Some of the cryptocurrency pairs, when I scanned it last week, these were like 10, 20% moves in a very short amount of time. So that it had the momentum, and that was because as people pile in, they see that as an opportunity. And I think a lot of that are automated algorithms that are running within the Binance exchange. And once it piles in all these algos to start driving up that price, it drives it up. And the hard part, obviously, is to know when to get out. And again, you can always use the ATR, average true range, as a form of exit as the momentum comes off. In other ways, use RSI as well. Is another way to do it. But using the automated head and shoulders, it blew my mind how fast, and it just went into this escape velocity of it just driving up. Some of the moves were 5, 10, 20%. And I saw other ones that would double your position in a short amount of time. It's like classic penny stock trading. So they, like I said, these opportunities exist. And this is when you read in the news and watch the news, oh, cryptocurrencies are useless. It's a bear market. You're going to lose your shirt if you do it. Yeah, you will. But using this stuff, it will help drive potential profit by using all these combined indicators. And it seems to work really good when you get them. And you can confirm them as well, because you have the ability of all the different parameters I'm showing you with all these indicators that show the confidence levels that it brings to the table, instead of either guessing, listening to cousin Johnny. You're generating your own data, which means you can use that as a form of confidence to build on which pairs are doing really well at that point. As I said, I put up a video on that earlier today. So this is what I do. I've got my meetup groups. Quant-Finance is one of the big ones. I've got my YouTube channel that some people are watching on. I also have the Facebook groups, got 11,000 people on that. So it's growing, and it's good. Other social media, this one, the Facebook groups, there's a page in the group. They'll stay open. The YouTube channel, that'll be staying open. The usual Twitter. But this very last one, the Instagram, is going to soon go private. And that's going to be only available to my members that request it. The reason I'm going to make this Instagram private, it's because there's Bloomberg charts in there. That's number one. Number two, they're from the news app. And I got to tell you, I've been looking at trading, learning about trading, listening to people about trading, talking to people about trading. And I'll tell you, I'm here to tell you that the Bloomberg news app and just consuming that has been the absolute number one way for me to learn about true trading. And that's where I'm confident now in my capabilities at where I'm at today. And that's all due to the news app. And what I've done is I just take a snapshot of that chart, put it up on my Instagram, and let it run through another set of processes to say, this is what you got to pay attention to. And I make a little video on it, do some digging, and I make that video available for my members. And I see things, a lot of things. The big one for me was last year when I missed it out. I'm kicking myself in the pants to this day, and probably till the day I die, is missing out on the Bitcoin move. I did not, I was a skeptic on Bitcoin this time last year. It was maybe at in March, $500. And this thing, the Bloomberg News app was literally screaming at me was screaming, buy Bitcoin, buy Bitcoin. And I ignored it. And where did it go? It went from 500 to 20,000 in December. That was its peak. And I got one story from one guy. He made $120,000 off of buying crypto, and it was like a 20 grand bet. So he was up 6 times off of just a little bet of 20 grand. And for some, that might be a good contribution to your retirement. And I learned all that through the Bloomberg News app, and that's how and why it's important, because I see trends for both where things will go weak and where things will be strong, and there's always some form of professional analysis done on that. And I consume this stuff, and I've gotten better at it. So I just want to put that out there, that if you want to get on that Instagram at QuantLabsNet account while it's free and it's open, jump on it, because it's not going to last forever. It's going to go private very soon, and nobody's going to have access to it. Only those that either come through my membership or that's pretty well it. Okay, so I have IBN Nafiz says thanks on my YouTube. Thanks. I just got a like. Thanks for that. I think I'm done on the presentation. Okay, so yeah, here we are. Questions. I can talk a bit. I'm getting a lot more confident with working with the cryptocurrency. No problem, RF, or yeah, Mr. Ron. No problem. If you got any questions, let me know. I'm pretty confident with what I'm doing. Just so I'm not going to hear and pitch stuff, but just as of today, without no notification, I've jacked up my elite membership, the annual $3,400. I just jacked it up today. I don't know if you've seen my stats, my Quantcast. We've got over between 40 to 50% of my audience make over 150 grand. So that's the kind of audience we attract through the website on there, and that's verified. That's through Quantcast, third-party verified. Probably one of the only sources out there that do that. And I put that out there with confidence because no one else is doing it. So to have those kind of numbers of the average person that comes into the world of Quant Labs, be it on the website or through membership, those are the kind of people we're dealing with. And I'm wanting to keep those stats pretty high. I've seen some other ones like Tim Sykes, where it's like the bulk of his audience is like $30,000 or something. I went 5 times that, but yet we're probably 1/10 or one thousandth of the size. But I don't care about that. What I care about is the quality of people that come in that are making some good coin. So I'll leave this up on the screen. So if you guys got any comments or questions, just let me know right now. I try to stick to the schedule every Monday or do something every week for everybody. If it's on YouTube or the Zoom US that I'm using right now to deploy this webinar. I'm always active on the Facebook group, as you can see there in the first link. And as I said, we're pumping quite a lot of, I'd say 10 people a day on that group. It's pushing 11 or 12,000. I don't remember, but now that I'm pretty well close to getting done with the indicators that I've worked with and played around with the Binance cryptocurrency data. My next big step I'm currently working on is to be able to rank, and I look for this, and I can't find anyone that does this, to rank trading opportunities on cryptocurrency pairs on Binance. Now, I need to remind that is 315 pairs. It's quite a bit. So yeah, I have that capability, and if I can get that script developed, which I'm planning to then pump out a spreadsheet saying, here's all the stats, the 315 pairs that are available, and here's why we rank this pair the highest because of of all the different parameters we use. And that's all from the charts I shown earlier, among others. And as I get through this, one of the big ones I'm finding is regression, linear regression using machine learning. Not even including any of the mathy stuff like ordinary least squared stats or R squared, or was it root, RMSC, root means standard error to be able to gauge and forecast data using a form of machine learning and be able to measure that against actual data. And one of the examples of that is just basically forward testing, back testing and forward-looking testing. And that's from Robert Pardoe's book. I put up a video on that earlier today. And I think that's very powerful information, using those stats to help gauge your analysis and your forecasting is really important. So I can add that as part of my ranking, call it algorithm or whatever you want to call it, that I really can't, I mean, I can make these stats available for a lot of the laymen. They won't know what it means. But if you're a mathematician, you'll get an idea of how they work. So I'm planning to kind of do something like that as well with a more advanced linear regression. And there's simple and multiple, and there's different ways to form that as well. So I'll be part of the selection on what cryptocurrency pairs work well. As I said, if you guys got any questions, let me know. I think I'm up to an hour of this stuff. But I'm pretty excited to know where I'm at because, like I said, the cryptocurrency pairs really do well. They do amazingly well because, like I said, I think it was yesterday, a 5% move on Ethereum, which drove up other cryptocurrency pairs or crypto tokens or coins. And you look at the pairs, I'm sure there's going to be some nice positive moves out of that. And from what I've seen in the analysis, it's quite interesting that there is some Bitcoin in the base quote, but there's quite a bit of Ethereum as well. So it says some. Anyways, anybody got any questions or concerns or anything, let me know. I'm here to answer whatever you like. Anything to do with trading, automated trading, programming, trading itself, economy outlook, you let me know. We can talk about it right now. Hope everyone's not silent here. Let me just see what's going on with my, yeah. Yeah, so anybody at all? I can terminate this call if you want, or this session. And I will be posting on my video YouTube channel this particular webinar. And I can definitely post that. Well, it usually goes up within a few hours once it terminates on YouTube. And also I'll post the video on the results that I'm seeing. I think I just got a question. Hang on here. Oh, Eric says, thank you very much. It was extremely helpful. No problem. I think he may have left. Okay, anybody else got any questions or whatnot? Somebody else? Okay, anybody? We got a few people left. We'll do something in a couple of weeks. If things are really good, I might do another surprise webinar session, probably unannounced or very short notice. If I see anything interesting in the world of cryptocurrency with Binance. Hopefully you've been watching that stuff. It's quite an interesting world of cryptocurrency. I'll be funding an actual account soon and actually putting some skin in the game for once and see how it goes. My goal is not to make a living off of cryptocurrency or any form of trading right now. I just want to make sure I can have a bulletproof system that actually works. So far, what I've seen with the entries between the harmonic patterns and the buy signal seems to work nice. And I'll just can say that. I have to do some stats on it, but even if I do that, is it worthwhile? I'd rather just let it roll and see what happens in the live markets. Best form of testing there is, but keep it minimal, as we all know. Anybody, questions, comments? Got a few people here. No, maybe. Anybody? Woohoo. No? Okay, I'll do my world famous like an auctioneer, going once, going twice, going 3 times. So there lies the seminar, the presentation. And hopefully you've learned some stuff tonight. On that, you know where I'm at. I've got showed you all the stuff on on the social media where you can reach me at. So I'll do another going once, twice, three times because it is out of sync. Going once, going twice, going three times. Okay, I guess we're gonna. I'll stop the share, and I am going to say thank you very much for coming out, and we shall talk to you later. Have a good night.